Welcome and what is up there, everybody? This is Casper Trader back here with another video today. And in today's video, we will be discussing the top 3 stocks to buy right now that are on huge dip buy opportunities, and as a little bonus, they also provide some really great dividends. So as you can tell, I'm pretty excited to get into this video, so why drag it out? But before we get into the video, I'd really appreciate you guys could smash that like button below and subscribe to the YouTube channel if you guys have not yet. I'd really appreciate it a ton. Alright guys, so getting into the video, starting off with stock number 1, which is Boeing. Actually, we have in our portfolio, so we can use that right here. I recently actually bought Boeing just a few days ago at a pretty nice price, I would say around $180 per share. And the reason why I think Boeing is a great buy, especially right now, is if we take a look at the maybe even 1-year chart, maybe 5-year chart. On any of these charts, you can see that Boeing has had a really great come up, first of all. But second of all, it used to just sit around the area of around $300, $330, $350 per share. It used to sit there for a solid 2 years. Well, and right now, as you can tell, because the whole global situation happening, the stock price for Boeing fell completely down to like $95 per share at one point. Right now, it's doing much better. It's at around $192 per share, 193-ish, but that is still much lower than it was back before the whole global situation happened, where it was sitting at around $300 per share at least. And if you were to buy this stock, let's say right now even at $200 per share, and hold it up to $300+ per share, that's a 50% gain on your position. And I think Boeing has a pretty good future ahead of them, where they have a lot of new innovations coming. But that's just the least of it. Even if it just goes back to where it was, not even talking about if it does even go past its all-time highs, if it just goes back to around the $300+ area, you'll still be able to get a gain of around 50+%. And that's not even mentioning the dividend that it provides. If you end up holding Boeing for, let's say, 2-3 years, then you're still going to get a really nice dividend of 4.3% per year while you're holding the stock, which you can decide whether you want to reinvest it back into your position or you could just keep it in cash. That's totally up to you. But I think just Boeing is a great stock at a phenomenal buying opportunity, especially if we look at the weekly chart. You can see that just a day ago, it was at $206 per share, and now it went down by over $10 per share. So you're not buying it at like a huge hyped up price. You're buying it at a pretty mild price where you still have a lot of potential for growth. And just with all these stocks, before I get to all of the rest of the ones, I just have to mention that I'm not a financial advisor, so I recommend you do your own due diligence, you do your own research before investing. And I'm just here sharing my ideas and my opinions on the stocks that I have a strong belief for that will grow in the future, but make sure to act on your own ideas and opinions, and make sure to do your own research before. So that is stock number 1, Boeing, and I really feel that this is a stock to buy for the future. So now moving on to stock number 2, which is CCL, Carnival Cruise. And for those who don't know, Carnival is a cruise line company. It's one of the most popular ones, and it's been made famous by, if you guys haven't watched Financial Education on YouTube, he has a great channel. He talks about this stock a lot. He has a really large amount of money invested in it as well. And the reason I think that this stock is at a really great buying opportunity, and it's just a great stock to buy right now in general, is first of all, it's way lower than it was back in before the whole global situation happened. If we take a look, it used to be sitting at around at least $43, $45, even $50 per share at some point. And then once this whole situation happened, you can see that it dipped down just within like a week or two, down to $8 per share. I don't know if I could get my mouse there. Yeah, but you saw it for a second. $8 per share within just a few weeks. We're back here in February, on February 14th, it was at $42 per share. And then April 3rd, just like 6 weeks after that, it was at $8 per share. So it had a huge drop off, and you can completely understand why, because their whole business model is out of service, especially now because of the situation happening. So they're not able to do cruises at all, which is their business. and that's the reason why their stock price fell so much. And who knows when they'll resume the cruises. I think I heard, if I heard correctly, that they're gonna try to start cruises up again, like in the beginning of August. But who knows if that will really happen. But I think if you give it 2 years, I think it's gonna go back to normal, back to how it used to be functioning, with the same amount of cruise rides, same amount of customers who go on these cruises. And I think just a phenomenal company to invest in, because even when it was at around $40 per share, there was still some growth potential for it. But now, if you're buying it around $20 per share, you're buying it at an absolute steal of a price. And that is not even mentioning the 10% dividend that it offers as a 7 price to earnings ratio. But just really important right here, it has a 10% dividend yield, which is massive. You're getting around $2 per share in dividends just from holding this stock. And if you end up holding the stock for like 2 years, that's some really great dividends that you can either reinvest back into your position or just hold them in cash. I mean, it's free money. But I think that this stock is just a really great stock, because if we take a look right now, if it's at, let's say, even $20 per share, you buy it at $20 per share, and it does bounce back up to even $40 per share. I like to not overestimate stuff too much. I like to keep it bare and simple and just give myself a lower expectation, so if it does go over, I'm happier, you know. But even if it bounces back up to around $40 per share, you basically doubled your money. Put in 1,000, you get 2,000. Put in 100, you get 200. However much you want to invest in it, that's up to you. But with this stock, I just have a small tip for you guys. Right now, it's actually not at a really bad buying price, because just a day ago it was at around $21 per share. Now it's only at $19 per share. But just as a little tip, just a little recommendation from me, you don't have to do this. This is just something I personally do, and I see a lot of people do as well. Is when you're buying into Carnival Cruise, this stock is really volatile, so meaning it goes up and down a lot, drastically, very often. So I'd recommend is actually just averaging into your position, meaning just buy a few shares here, buy a few shares there. So you don't just buy everything. Let's say you end up buying it all, you put up your whole portfolio into Carnival Cruise, which I don't recommend, but you put it all in at $21 per share, and then a few days after that, boom, you're at $19 per share. You just lost 10%. That wouldn't be too great, right? So I'd recommend is just putting a few, as much as you can afford, just a few bucks every day, a few shares every day. Just sort of what I'm doing. I'm just looking at these great dip buy opportunities. I might even buy like 1 or 2 shares today, because that's at a pretty good price. And once you average in, you're going to be at a pretty good average price, meaning you're not going to buy in at a super high price, you're not going to buy in at a super low price. So you're just setting yourself up for pretty good success. So that's what I'd recommend with Carnival Cruise. I think it's a great stock, a lot of future potential, and it's just at an unbeatable price, an unreal price right now compared to where it used to be just a few weeks ago, actually a few months ago. So yeah, Carnival Cruise, I love this stock. I think it's great, it has a great dividend, and that is stock number 2. So now moving on to stock number 3, and stock number 3 is one that a lot of dividend investors love, and I've got to say a lot. When I mean a lot, I mean a lot. So, and that is AT&T. AT&T is just a phenomenal company for dividend investors, people who invest in dividend stocks mainly for dividends. AT&T is like on the top of their list. This stock is just a stable company. For those who don't know, AT&T is a cell phone service provider. They also do internet, and they're in that kind of area where Verizon, T-Mobile, Sprint, Cricket, all that kind of, all those companies are in the same sector. But the reason why I think AT&T is at a really good buying point right now, I think is a great buy at this moment, is first of all, it is at a pretty good dip price. Just a few days ago, well, maybe a little more than a week ago, it was at $33 per share, and now you can get it for only $30 per share. So it fell down by 10% in just like a week. And with this stock, you're basically buying and holding for dividends, and if, depending on how long you want to hold, I would personally hold just forever, or as long as this company is profitable, because I think it just has some really great dividend yield. It's a stable stock that isn't going anywhere within the next multiple years. So if you're buying the stock, you're going to get it close to a 7% dividend, at least 6%, and I think that this stock can easily recover back to where it was, close to the $40 area, at least $35 per share within the next few years. And I think that just because it has So it's such a great dividend, such a great stable company to invest in. Like if you take a look at the S&P 500, it grows by around 7% every single year, or 7 to 10%, depends on the year. Some years were more, like last year, but let's just say 7 to 10%. You're getting 7% right away, just guaranteed from dividends. Well, almost 7%. And the rest is just like a bonus, where if the stock gains price, that's just a bonus for you. I think AT&T is just a great stock to invest in. I personally love reinvesting my dividends from this stock. I got $2.60 last time on May 1st. I reinvested that back into my position so I can just compound that and compound that and compound that. So I think all in all, these three stocks, Boeing, Carnival Cruise, and AT&T are just phenomenal buys right now, especially in the current markets where they haven't recovered as much as if we take a look at the overall stock market. For those who don't know, VOO tracks the overall stock market, well, tracks the S&P 500. It's an ETF you can invest in. If we take a look, it has almost recovered from the whole global situation that happened recently. It's so close to recovering. But the stocks that I showed to you guys today in today's video are nowhere near to recovering to that price where they were at before the whole situation happened. So you're still getting them at really great prices. It's like buying VOO at a really low price. But like I said before, make sure to do your own research, do your own due diligence. I'm not a financial advisor. These are just my opinions on these stocks that I would personally invest in. So those are the three stocks for today's video. Thank you guys all so much for watching, and I hope you guys have a great day.